Hey, good morning, everybody. Today is Wednesday, September 23rd, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Markets gapped down yesterday, but showed some resilience, closing lower but in the upper half of their daily trading ranges. Trading volume was heavier than Tuesday, giving us another distribution day. A distribution day is a trading session when one of the major averages closes lower on heavier trading volume than the prior session. Too many distribution days in a short period, particularly at the beginning of an uptrend, can be an indication that the market's in trouble. Declining issues bettered advancers by nearly 4-1 yesterday. While not looking healthy, the New York Stock Exchange advanced decline line is looking a bit less bearish, having put in a higher high and a higher low since the August 24th market low. New lows continued to better new highs. Small capitalization stocks outperformed large again yesterday and continue to outperform on a 10-day moving average basis. This is behavior more typical of a bull market. Our market momentum model is indicating recent market momentum is to the upside. However, new highs versus new lows have flipped back to a bearish indication. Our swing timing model is indicating a neutral condition in the market. Our market timing signal on the NASDAQ is barely holding on to our most aggressive margin signal, while the S&P 500 is indicating a primary sell signal and an aggressive buy signal as a secondary indication. What this means is our most aggressive traders can begin to selectively utilize margin to leverage their portfolios. It should be noted that while the NASDAQ has gone to a margin signal, the S&P 500 remains on a primary sell signal with a secondary aggressive buy. Our most conservative traders may want to wait for the S&P to confirm the NASDAQ. The O'Neill timing model is indicating an uptrend under pressure. Since O'Neill's follow-through day confirmed the uptrend in the market on September 8th, the S&P 500 has 4 distribution days, while the NASDAQ has had 3. The distribution count is beginning to reach levels where it should be a concern to the bulls. I think a note of caution is in order here. While the NASDAQ is on our most aggressive buy signal, with the major averages having fallen so far below their 200-day moving averages, it's likely that the market will retest recent lows. Be careful with any entries and keep your stops in place. This market could continue to be prone to whipsaws. Again, while our primary market timing signal is a buy and our secondary indication is a margin signal on the NASDAQ, these signals have not yet been confirmed by the S&P 500. Be careful. Okay. What we're looking at here is a list of Moody's 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we identify where the power in the market is and get out in front of it. So let's see where the strength in the market has been in the past week. In the past 5 trading sessions, factory automation equipment is up 21%, renewable energy 8.8%, consumer products up 4.1%, precious metals mining up 3.4%, and other wholesale index is up 2.6%. We've been seeing a lot of retail recently. We've also seen a lot of precious metals in recent scans. These may be a couple areas to look for strength in the market as we go forward here. Let's see what the NASDAQ Composite's up to. The NASDAQ yesterday was down 72.24 points, or 1.5%. We closed at 47.56. Trading volume was slightly higher than the prior day, giving us a distribution day. For you followers of William O'Neill, we are in an uptrend under pressure. We have 3 distribution days since the market confirmed the uptrend on September 8th. The market right now is bracketed by support down here in the 42.92 area and resistance up here in the 4,900 range. Right now, the NASDAQ is on our most aggressive signal, which is a margin signal. But notice how the NASDAQ right now is trading below this envelope. This envelope is a 1% envelope around the 21-day exponential moving average. In order for our timing model to go to a sell signal, the NASDAQ composite has to be trading below its 200-day moving average, which it is, at least 1% below its 21-day exponential moving average, which it is. The 21-day exponential moving average has to be in a downtrend, which it is, and the 10-day simple moving average has to be in a downtrend. 10-day simple moving average is still in an uptrend. That's the only thing that's keeping us from being on a sell signal on the NASDAQ composite right now. And so I would take the margin signal on the NASDAQ with a grain of salt at this point. Let's take a look at the S&P 500. The S&P 500 yesterday was down 24.23 points or 1.23%. We closed at 1942. Trading volume was higher than the prior day, giving us another distribution day. The S&P is in an uptrend under pressure. We have had 4 distribution days since confirmation of the uptrend on September 8th. Right now, the S&P is bracketed by support down here in the 1867 area and resistance up here in the 1993 range. The S&P remains on a sell signal, but our secondary signal is an aggressive buy signal, which indicates that most people will want to remain on the sidelines accumulating cash, but aggressive traders may want to begin putting money back to work here. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson LaCours Incorporated believes to be accurate. Ohanneson LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohanneson LaCours, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.